All right. And we are live. Hello, everyone. Welcome to the show. Welcome to Milton's Briefs. And in today's episode, we're going to be covering a lot. Make sure everything's set up right. Just shift over a little bit. Perfect. Okay, so in today's episode, we're going to go over a lot of events that occurred today, including the leader Xi of China and President Trump agreeing to a trade deal, a trade truce, that lasts 1 year. So a really big trade deal that happened. And that's one of the biggest reasons why the market was so high the last couple of days, except for today, which we're going to get into. Next, mortgage rates fall to the lowest level since last year. So mortgage rates are falling, and that's likely due to the Federal Reserve, which we'll get into in a moment. And next, Chipotle fell as much as 19% as they cut its full year sales outlook for the third straight quarter. So they've been really struggling with their sales. And lastly, but not least, gold demand hits a record. So that's right. Despite the massive sell-off that was occurring, gold is still having very high demand. So if you enjoy this content, please like, share, subscribe to the channel, comment your thoughts below, and we will get right into it. Close that. Okay. So the first thing right here is the trade truce. Let's look into that right now, because this was a really big deal why the market was so optimistic today. So let's get into the details of what really happened. What's in that deal? Because from what I saw, it was about soybeans and fentanyl and rare earth minerals. Those were the three things that were mainly impacted in this trade deal, because China was threatening to not deal rare earth minerals to the United States, and the US was threatening more tariffs on fentanyl. So let's get into what are the biggest takeaways, because there's so much that really occurred. There's so much chaos that occurred between China and the United States really the last year with trade deals and stuff, and it's hard to keep up. So I'm here to break it down for you all. So according to the CNBC article right here, Beijing agreed to pause for 1 year. So it's not a complete deal. It's more so a pause. A truce, in other words. So they're pausing the sweeping export controls on rare earths announced on October 9th that pushed China and the US toward a trade war. So they're basically saying, okay, we'll deal trade rare earths to the United States. So in essence, because of this, the US cut tariffs on China-related fentanyl by 50% pretty much, to 10% from 20%. So that's a pretty big cutoff there. And this is the thing, China is and the reason for this is because the US is forced to make a deal with China because China holds a huge amount of rare earths. And I went into this in a separate video, but just to show you all, because I want to get the details right here. They hold the most rare earths in the world, controlling 60 to 90% of mining and processing of rare earths. So that's even more than I expected. So they control a huge margin of rare earth minerals, and this is why the United States was in this position to begin with. I believe they were kind of forced to really make a deal, because otherwise they weren't getting one. Okay, so let's see if there's any other details here. Trump told reporters on board Air Force One that rare earths agreement is a 1 year deal that will be, quote, very routinely extended as time goes by. Okay. And this is interesting, because what have we seen from the Trump administration as far as its tariffs with China? Not tariffs across the board, because we know the story with that. But when it comes to China, the Trump administration has, over time, put off tariffs, extended truces, or pauses on tariffs with China, because the market has always reflected very poorly when these tariffs are announced. And we've seen this ever since Liberation Day in April, when tariffs were introduced. President Trump paused those tariffs because not only the stock market tanked, but the bond market took a really big hit. And that's when we saw the massive sell-off of U.S. Treasuries, which hasn't happened in a very, very long time, and threatening the global dominance of the dollar, et cetera, all of that. So that's sort of the background of that information. So this was a really important deal for the United States because the Trump administration wants to end off 2025 on a high note due to a lot of the just everything that's really happened, sort of the turmoil that the administration has been involved with, especially economically. So Trump says we have a deal. Now every year we'll renegotiate the deal, but I think the deal will go on for a long time, long beyond the year. But all the rare earth has been settled, and that's for the world. So that's an interesting comment right there from the Trump administration. So did China win? The U.S. is dependent on China rare earths. That bingo right there, which are used to produce magnets and weapons platforms, semiconductor manufacturing, electric vehicles, etc. Especially with electric vehicles being really a huge motivator for the Trump administration to help and all that stuff. So let's see. Let's see where the truce is vague in. So it's not entirely clear what China has agreed to in key areas such as agriculture and energy purchases from the United States and cooperation, on fentanyl trafficking. Trump said Beijing has agreed to purchase large amounts of soybeans. That's one thing, because they threatened not to purchase soybeans from the United States. So that's a really big deal. Sorghum and other farm products. China will buy 25 million metric tons of soybeans annually over the next 3 years, Treasury Secretary Bessent told Fox Business in an interview. Let's find an expert analysis of this, because I like to go to Yahoo Finance or Bloomberg and see what they say about it, because I'm kind of curious what they're going to say. My thoughts is that there still needs to be more done, because just like those other pauses that the Trump administration has done with tariffs, this sort of deal, I think this is a very similar thing. Let's go into a financial perspective rather than like a news anchor type of perspective that's more political. Well, Bloomberg must have something here. If they don't, then I'll just go. Also get into the rate cut that happened, by the way, with the Fed, because the Federal Reserve agreed to cut interest rates by 25 basis points. Again, that's no surprise due to just the pressure of the poor labor market that's been occurring. But at the same time, the Federal Reserve doesn't have a lot of data with those job numbers on how to gauge it. So I'm going to get into that in a moment, but let's go into the trade. Let's see what this is. Let's check this out here.
The news today, the one year truce, where does that bring us in the context of the relationship in the between the U.S. and China from a trading perspective? Before President Trump took office for the second time, is it back to what it was then, or is there still tension from when from his policies early on?
Look, we have the world's top producer and the world's top consumer meeting, and they both have market power in their own way, and they need each other. And that's what we saw. It was effectively a game of chicken. Trump started it, and she stayed in the battle, and both just put on the brakes. I think we're close to pre-Liberation Day tariffs, not necessarily close to where Trump came in. There are a few tweaks because we still have some of the fentanyl tariffs. U.S. firms are still facing this licensing regime on magnets. So there's still some things that are in place, but we're pretty close to the pre-Liberation Day tariffs.
Caroline, what is more significant, what they did talk about or what they didn't talk about, meaning Taiwan, TikTok, NVIDIA's high-tech chips, those Blackwell chips, China buying oil perhaps from Russia? Like, there's some really important issues out there that felt like they were missing.
Wow, that is an excellent question. I'm so glad she asked this question, because I personally believe that wasn't discussed, because there's no way that China would agree to a truce for that long period of time when it comes to the chips manufacturing, NVIDIA, and all those different terms that the topics that she talked about. So I personally think that's why it wasn't covered. I think the Trump administration came in there and stated that we need, we got to make this deal. We need the rare earths. We need it for military development, et cetera, like electric vehicles and all that. And I think the United States was willing to sort of forego those motivations in order to get the deal done. But that's my personal non-expert opinion.
Yeah, and I think we're going to see that going forward. There's going to be ambiguity on all of those difficult issues. But I also think there's market discipline on the worst case scenario of an escalating trade war. So they both realized how much they need each other. The US market is just impossible to replace. We account for 15% of total global imports. There just is no one else who's gonna take that.
That's a really good point that Caroline brings up, because it's not only that the United States is a really powerful country around the world, but the United States has the strongest military in the world, and the United States is the most consumerist culture. Every tourist in the United States, when they come to visit, what do they notice? That people have, there's bigger of everything in the United States when it's compared to other countries around the world. Bigger homes, bigger cars, like food portions, all that. And so that consumerist culture, that mindset, that's not just a mindset when it comes to everyday products like televisions or just toys or anything like that. What that involves, make sure my battery's in there. What that involves is other items as well. And she states this right here: military spending, and the United States purchases a lot and imports a lot of products around the world because the dollar is so strong that Americans can purchase more items with this dollar. And they can only do that when products are imported from other countries that produce for less money. And that's what we're seeing right here with this deal that took place.
China accounts for the same 15% of global exports of goods. We can't completely replace China. So the countries have settled the deals that are or in the areas that really matter for them right now for their economies. But we're going to see a lot of ambiguity on those much more complex issues.
So were we played? Were citizens of both countries played? Were investors played? Did we kind of start at point A and go through the whole alphabet and then come back to point A?
Yes. I think Trump has tried the kind of bullying technique, and it's worked with everyone else. Early on, it looked like EU would also retaliate, but they're just too dependent on the US for security, and that's very important right now, so they didn't. China is equivalent to the US, and China said, no, we're not going to be bullied. We also have things you absolutely need. And now there's kind of a truce. And I think we'll see this muddling along with market discipline on both sides. It'll hurt the US too much to really do a lot more on China. It'll hurt China too much to do a lot more on the US. But in this period of truce, the most important thing is that we work with our allies to develop secure supply chains. So we are not dependent on China for rare earths in the way we are now.
So those allies, including Australia, Canada, where else?
Right, because I believe the United States did a deal with Australia, if I'm not mistaken. Let me check that out right now before I continue this video, because I think the U.S. did a trade deal with Australia earlier in the month, or in August or September, with rare earths. I just want to be sure. U.S. Yes, so late October they did a rare earths deal. So the U.S. and Australia did a rare earths deal that but won't shake the dominance of the Chinese, which is very obvious because the United States just did a deal with China today. So that's pretty obvious. But this deal was $3 billion of mining and processing projects. So yeah, this is a pretty big deal as well. But again, doesn't replace the effectiveness of China as well. So the United States did the deal with Australia for the rare earths, but at the end of the day, they still needed to come to the table with China to ensure that they can get those rare earths from China. And it seems like China was in need of this as well, because they need the strong consumer like America is.
Yeah, exactly. So the agreement with Australia is fantastic, and we should be looking for more agreements like that. Latin America has a lot of rare earths that could be explored that we're part of the Western Hemisphere.
But we have a complicated relationship with some Latin American countries currently.
Yeah, that's absolutely right. And so the strategy, we can't take on everyone at once. And China really is the biggest competitor, the biggest strategic threat to the US, and we should be working to have agreements with countries where we can both pull them out of the China sphere and where they have things we might need.
It couldn't possibly.
Which is interesting that Caroline states this, because the global broad tariff policy of the Trump administration has done the opposite of that. In fact, I'll research this really quickly. Not research, but just look it up really quickly. But there's much data on this, how tariff policy countries to China. I believe this was involved with India. India was at least communicating with China and things like that. Yeah, this is much more in-depth article, so I'll have to do another segment on that later. But I know India was communicating with China when the tariff policy was in place, when President Trump, his administration, doubled the amount of tariffs on oil. Or I don't know if it was oil. India was purchasing oil from Russia, and then what happened was, because Trump wanted to prevent that from happening even further, he doubled the tariffs on imports from India. So that was the whole ruckus, and that's why the Prime Minister of India was invited to go to China, and then the Russia leader was there, and all that. So it's very interesting.
Possibly be thinking about the U.S. shooting on Venezuelan ships.
Thinking about that, I'm thinking about I'm absolutely thinking about that.
It's fun.
That's a huge deal, and that's why a lot of several members of the military have resigned over these shootings that have been occurring on the maritime waters near Venezuela. So this is very interesting. I'm really glad you brought this up.
Funny, not funny, right?
I'm also thinking about Argentina.
Yeah,
It's
exactly.
complicated in a different way.
Well, Caroline, and I do think about the U.S.'s position in the world at large. Like, we still have trade agreements to be worked out with what used to be a big friend of ours called Canada, and yet that is still up in the air. How does the rest of the world feel about the United States right now against China? Because I do feel like there is this thinking about China domination. And so people trying to do alliances to combat that. So is the U.S., as we see it, do that deal with Australia and maybe reaching out, realizing it can't do things alone? Are things changing a little bit in terms of the U.S. perception by the rest of the world?
I hope so. And
these are more so Caroline's opinion. So we'll go to the next topic. Let me see. There's a Yahoo Finance that they talk about. Obviously, they're going to talk about it, or CNBC actually. Let's see they have good coverage typically too of this. And get some more analysts and professionals about this trade deal. Let's go to the CNBC channel. But yeah, this is really interesting because I think there's a lot of moving parts here. I don't think this solves the trade policies or anything. This is just a simple truce for the U.S. to get what it wants and China to get what it wants. China gets the revenue from selling the rare earths. The United States gets the product that they can use to develop their military. That's the basic simplicity of it. And I think things that involved the chip manufacturing, AI, those sorts of things that involved China that wasn't discussed with this deal, that's what I think the market is really going to react to in a big way. So let's see if there was come on, let's see, there's a trade Wow, I guess they didn't do a coverage on it. I'm sure they did. Trump and Xi meeting. Oh, here we go. Trump and Xi meeting was only a small win. Let's see what this is about. So Brookings, I think his name is right here.
But let's talk about the meeting and more. Joining us, Michael O'Hanlon, Director of Foreign Policy Research at the Brookings Institution. Michael, good to see you again. We can dither on what was given, what was received, what was taken, what was asked, but how much should we just take from the fact that the two men met in person at all? That would seem to be a critical first step.
Yeah, I agree with you. I'm still worried, as are the markets and all the strategists I know, about the future of U.S.-China relations. But I think that as long as Xi Jinping and Donald Trump are talking, there is a message, a sense that we need to prevent this relationship from falling completely apart. And that's somewhat reassuring, at least in the scheme of things, compared to where this could go at a time when many people think that the United States and China may be headed for war. Yeah. So I'll take a small win, but I think that's all it was.
Yeah, and on the flip side of that, I would say that President Trump.
And again, I completely agree with what Michael has to say here, because this deal is all about, it's a business transaction. United States gets the rare earths, China gets the revenue from selling the rare earths to us. And that's pretty much it. I mean, of course, we lowered the fentanyl tariffs from 20% to 10%. And this is a year truce, but this by no means is a very detailed deal.
Also, obviously met recently with Vladimir Putin, and that relationship seems to have soured even more than it was prior to that meeting. So we can't just automatically take away it's a positive, but at least there was a handshake, and I assume some sort of now more direct communication between the two. What would you like to see happen now?
Yeah, I don't know how to read where we are with Trump and Putin. You know, the Alaska summit was a risky gamble. A lot of people felt like it was just way too much to offer to a guy who's got the blood of several 100,000 people on his hands, or actually more than 1 million casualties in the Russia-Ukraine war. If it had delivered a more positive diplomatic environment for negotiations, I would have been willing to support it.
But that's the thing, that summit didn't produce any real peace negotiation or any moving steps for Ukrainian independence.
But it's really led nowhere. Putin seems bent on continuing this fight. He seems to think time is on his side. He seems indifferent to casualties, whether Ukrainian or even Russian. And I'm afraid that the relationship is not working. I think President Trump has come a long way in understanding the cause of this war and the obstacle to peace. And that's Vladimir Putin, of course, not anybody else. But we haven't yet found a way to put enough pressure on Russia collectively to get this thing to a ceasefire. So that's going to be a big task ahead.
On the China economic side, a lot of debate is sort of made of who has more leverage. China owns a lot of U.S. bonds, Treasury bonds as well, but they don't buy that much stuff from us. What they buy is sort of equivalent effectively to the GDP of the U.S. state of Maryland. We obviously acquire a lot of stuff from them, including some critical aspects of rare earth minerals, but also pharmaceuticals. They control critical chains. In your mind, Michael, who has...
That's a really good point. Man, I completely forgot about that. Pharmaceuticals is a really big industry as well.
The real leverage economically in the U.S.-China relationship?
You know, it's a great question. Either one of us could blow up the world economy by sufficiently austere and severe economic warfare measures. So in that sense, we both got our hands sort of metaphorically around the other's throat. And I don't know that either one could really plausibly survive without the other at the moment. I'd like to see us reduce some of our strong dependencies on things like pharmaceuticals, in order to make sure that if China really went to the mat and cut everything off, or if there were a Taiwan war that led to a complete end in U.S.-China economic interaction, that we could survive better than they could. But I'm not sure we know right now who would cry uncle first.
We don't, but it's.
Okay, so that's the end of that clip. Make sure I get out of this. So, yeah, so there's a lot to break down there. Let's close that out. I think with the trade deal, again, I think it's a more simple business transaction. I think that's not anything super comprehensive, in my opinion. Again, I'm not an expert. I'm not a foreign policy trade expert or anything like that, but that's just my opinion on it, just from what I've seen and read about it. But so with that in mind, let's transition to the next topic. And I was going to talk about mortgage rates and how it's hit the lowest level since last year. So it's hit its lowest level. I think it was like 6.17% from what I read last. This time last year was 6.6 or 6.7%. So it's definitely a considerable drop off in the mortgage rates. But what that has to do with the economy is really key, because purchasing homes is really unaffordable for millions of Americans, and a lot of them don't want to get locked into a mortgage with a very high interest rate. That's one of the biggest reasons why many home buyers were not wanting to look for a home. Not even mentioning the prices of homes being really high. But what leads to this? Like, what's the reasoning I'm speaking about this? Well, it's not just the fact that interest rates are going up and down, because that can happen in general. But the biggest reason that this is occurring is the Federal Reserve, and the policy that the Federal Reserve is initiating is loosening monetary policy. So those of you may wonder, what does that mean? Loosening, tightening. These terms are used interchangeably, and to the common eye, you may think to yourself, I'm not really sure exactly what this means, and that's completely okay. I didn't know for a long time either. But what the Federal Reserve is doing right now is they are cutting interest rates, and what that does is it stimulates the economy. So the Federal Reserve is purchasing more bonds, and in doing so, they cut interest rates, making it easier for businesses to borrow money at lower rates for short-term government debt, not long-term, short-term. That's key. And doing so, the hope is to spur the jobs economy. And for many of you who know, or even been moderately paying attention to it, back in 2020, 2021, 2022, interest rates were as low as 3% and maybe even a little bit lower than that for mortgage interest rates. And that's because the Federal Reserve drastically cut interest rates to spur up the economy during the pandemic. And now what we're seeing is, due to the negative jobs numbers that came out, especially from the last 3 to 4 months of the huge revisions that the Bureau of Labor Statistics reported on, what's happened and what's a result of that is the Federal Reserve cutting interest rates to spur up the jobs economy. And what makes this really difficult is that we don't have all, or the Federal Reserve, Americans also, but the Federal Reserve doesn't have all the government data and all the key points to all the key data and metrics to go forward and make a decision on whether or not to cut interest rates. The only key metric that they had was, I think it was the CPI, and that was it. They didn't have the jobs numbers because of the government shutdown that's been going on for the second longest time in American history. So I know I said a lot there, but just bear with me. So let's see how this is happening. So the Federal Reserve cut interest rates for, I believe this was the third time in a row they cut interest rates by 25 basis points. So in other words, a quarter point. And that's because, the jobs numbers were poor, but that was all the way back from September. And now this is one of the first times that at least I remember seeing the Federal Reserve enacting a monetary policy of cutting interest rates without all that data. I think that could be a dangerous thing, and just from my opinion. But let's see some of the highlights from Jerome Powell's meeting with the FOMC, because I think it's really important to understand what his viewpoint is on a lot of key decisions, because he's the Fed chair and has a lot of power with the monetary policy. Let's see. And this occurred yesterday. So yesterday or 2 days ago, but I'm pretty sure it was yesterday. So, and for those of you who are not aware, the Federal Reserve affects short-term interest rates. I think I might have said that already, but just to be clear, it affects short-term interest rates like T-bills that are anything under 10 years. And mortgages, most people are getting 30-year fixed mortgages. So it doesn't affect mortgage rates directly, but sometimes there is a correlation, not causation, but a correlation that when the Fed cuts interest rates a lot, sometimes, and in many cases it does affect the mortgage interest rates. Not all the time, but sometimes. And that's something that I need to kind of review a lot more. But let's see a clip here. We're going to watch an hour, 2 hours of Powell speaking.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Although some important federal government data have been delayed due to the shutdown, the public and private sector data that have remained available suggests that the outlook for employment and inflation has not changed much since our meeting in September. Conditions in the labor market appear to be gradually cooling, and inflation remains somewhat elevated. In support of our goals and in light of the balance of risks to employment and inflation, today the Federal Open Market Committee decided to lower our policy interest rate by a 0.25 percentage point. We also decided to conclude the reduction of our aggregate securities holdings as of December 1. I will have more to say about monetary policy after briefly reviewing economic developments.
This is interesting that he talks about stable pricing, because the issue with lowering interest rates by a 0.25 point is not that it's going to raise prices dramatically. I wouldn't even say that, because the only reason we saw a dramatic rise in prices 4 years ago, the inflation was like 8%. It was wild. It was unbelievable. Was because the Federal Reserve drastically cut interest rates at a very high rate very quickly. And that's what drove prices up so much. But what we're seeing here is that we are seeing currently tariffs that are in place that is putting upward pressure on prices. Now, the market celebrated early in the week the CPI report that came out that showed a moderate inflation increase up to 3%, not huge. So that's what gave the Federal Reserve the green light to really cut interest rates. But at the same time, that's still an increase, and that doesn't mean that prices aren't going to increase more going into the future. So what we have right here is a unique situation, because this is not what happened during the pandemic in 2020 or 2021, 2022. Now what we have is not only an upward pressure on prices due to cutting interest rates, but we also have a second motive, a second layer to this, of the policy of tariffs that are driving prices upward on many things, on groceries, when it comes to automobiles, when it comes to so many other things. And the Trump administration has drastically undergone a method of suppressing or changing his mind, or they say taco, and Trump always chickens out. They use these different terms when describing his government policy of chickening out on certain tariffs, because it would have drastically increased prices, like changing his mind on the automobile tariff and other items such as that. But many other items are still increased, not drastically, but slowly inching up. So for now, I'll give the benefit of the doubt that, the prices are not increasing like super dramatically like 2020. So the data does not support you saying, okay, this is all on tariffs and not natural and not just the normal progression of the economy. It could be that too. But my prediction, my analysis, my non-expert sort of take on this is that eventually over time we are going to see a dramatic increase in inflation, because President Trump is not going to change his mind on tariffs on a broad scale, in my opinion, because he has many tariffs still implemented to this day.
Available indicators suggest that economic activity has been expanding at a moderate pace. GDP rose at a 1.6% pace in the first half of the year, down from 2.4% last year. Data available prior to the shutdown show that growth in economic activity may be on a somewhat firmer trajectory than expected, primarily reflecting stronger consumer spending. Business investment in equipment and intangibles has continued to expand, while activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends. In the labor market, the unemployment rate remained relatively low through August. Job gains have slowed significantly since earlier in the year.
And a lot of that has to do with the revolution of artificial intelligence. And I have to pause this. Oh, my bad. I have to pause this video because this video came out before the massive layoffs that happened at Amazon and UPS. And they both are utilizing AI in their companies. AI. So tens of thousands of layoffs are being blamed on artificial intelligence. What are companies actually getting? So Amazon announced an elimination of 14,000 jobs, and AI is the leading cause. And so we're seeing this happening right before your very eyes, right here. So the largest companies are reducing headcounts, and there has to be a reason for it. And it says AI right here. I mean, Amazon said that. This is from the senior vice president, or looks like herself, Galetti. Quote, "This generation of AI is the most," apologies for that. "This generation of AI is the most transformative technology we've seen since the internet," which I agree with that. "And it's enabling companies to innovate much faster than ever before. So when you're looking at a business model, if companies can have an automated process, run their systems, run how they're doing things without employees, without having to pay employees a salary, benefits, health care, paid time off, etc., all these things, companies are going to do that because in a business structure, business model, you're going to try to find the most efficient means to get the job done while cutting costs. And sadly, that's the case. And we see this when there's massive layoffs, that a lot of companies, their stock goes up. That's the ugly reality of it, because they're cutting costs, and shareholders are usually in favor of that, which is a shame. But I have to look into that more. I'm not 100% sure, but that's usually what I see typically, is that these shares go up in a lot of cases. And now, of course, because they don't want to reveal completely, they're trying to downplay. I don't know why I keep doing that. My bad. They're trying to downplay the role of AI in the layoff decisions. But I mean, it's pretty clear what's going on here. I mean, I don't want to just say that just because I'm saying that, but there's data right here. Let's see, because I know that it's somewhere right here. So Boston Consulting Group, 60% said they had seen minimal revenue and cost gains despite substantial investment in AI. Okay, that's different. But yeah. Let's see, Amazon. I'd be more specific. Oh geez, it's lagging a little bit here. I'll look into it later and just play the video here so we don't lose our spot.
Good part of the slowing likely reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Although official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue to decline. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal.
But this is the thing, when you're cutting interest rates, it's going to be really difficult to maintain that goal of maximum employment and a 2% inflation rate when inflation is about 3% right now, and you're cutting interest rates, so it's likely going to go above 3%, 3.1, 3.2%, etc. So I think, to me, it doesn't really make sense how you can have these two goals in mind, but going massively on a monetary loosening strategy.
It's based on the Consumer Price Index, suggests that total PCE prices rose 2.8% over the 12 months ending in September, and that, excluding the volatile food and energy categories, core PCE prices rose 2.8% as well. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or two or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 3.75% to 4%. Higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation.
Wow. So that's very direct, very directly stating to the Trump administration's higher tariffs are increasing prices. Let's look at that again real quick.
To 3.75% to goods, resulting in higher tariffs are pushing up prices in some categories of goods, resulting in higher overall inflation. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed. Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem.
Okay, so that's a little clip from Fed Chair Jerome Powell. So, yeah, that's a little clip there. Let's see. Let's get into the mortgage rates because let's see what's going on with that. Rates. It's by Yahoo. That's the first clip or first search right there. Oh, and then this says, wait, this says average long-term U.S. mortgage rate drops to 6.17%, which I said earlier. But then this article says mortgage rates jump 20 basis points following Fed cut. so okay, it literally jumped. So that article earlier is basically useless because the average rate for 30-year fixed just jumped to 6.33% today. So forget what I said about the lowest level in the market or since last year, because clearly that's not true. And that's exactly what my point was earlier when I said that cutting interest rates does not always guarantee lowering mortgage rates, because during the Biden administration, we saw the Federal Reserve cut interest rates several times and mortgage rates did not go down. In fact, it ticked up. And this is exactly what we're seeing here. So this is a really, really great example. I'm actually glad this came up right here, because on Tuesday it was 6.13%, but after the rate cut it went up to 6.33%. Interesting. That's something. The market's enthusiasm for 3 Fed rate cuts in 2025 has grown a bit too large for the Fed's liking. Chief Operating Officer at Mortgage News Daily, stated. The market was nearly 100% certain of another cut in December, but here's the thing: the Fed was not as certain, and Powell made it a point to say so yesterday. Let's look into that one real quick, and then we can move on to another topic. Oh, I see. So 10-year Treasury yield surges back above 4% after Powell says December rate cut is far from guaranteed. Let's go. Let's go to the clip right here. Just a quick one, and then we can discuss. But yeah, this is pretty interesting. Interesting, which makes sense. He's not gonna say that, oh, this is gonna happen, this is gonna happen, because obviously Jerome Powell is very consistent with stating that he wants to, him and his team and the Federal Board wants to review the data to make a decision. So he's not going to state immediately what's going to happen in December.
Term, risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate. With downside risks to employment having increased in recent months, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. We continue to face two-sided risks.
That's pretty straightforward. So the next topic I wanted to discuss was Chipotle. And I know you're probably thinking, why the heck would I want to talk about Chipotle? Well, I think it's not just that the stock fell, it ended the day at 18.18% loss, and it topped the day at a 19%, I believe, 19% downfall in the price. That's not the only reason I want to talk about Chipotle. But the biggest reason is because Chipotle falling down in price has a lot more to do with the state of the economy and how high prices are and the price of living has become in the United States. So I found this article right here. Chipotle stock craters. Let's see. Chipotle stock craters as company says young people without jobs can't afford their food anymore. That is a very strong thing to say. Because, when I was in college, Chipotle was one of the top places that many students wanted to go. You wanted to get a quick bite to eat, something that's not too much of trash, not too unhealthy, but something decent, decently edible, and can fill you up. But according to this article, this shows that, Chipotle has lost revenue, and look at this. It went on yesterday, it cut its full year sales outlook for the third straight quarter, as the company continues to deal with a traffic decline and economic pressure on its core customer, particularly young people. So this is really interesting. And again, a lot of young people, it's really popular to go to Chipotle. So why are they struggling with this demographic? Why is that? So the CEO, Boatwright, said in the company's earnings release that the chain continues to see persistent macroeconomic pressure. So that's a long phrase for basically saying that it's harder for younger people to afford fast food type of food nowadays. In a lot of ways, I can agree with that. Fast food typically has gone up in a lot of ways, and to the point of, if you subtract the tip from going out to eat at not a fancy place, but like let's say, an Applebee's or like your typical diner, something like that, the price isn't too far off in a lot of cases. And I think a lot of people are realizing that. So, let's see. So there's a challenge of the cohort between 25 and 35-year-olds. And this group of people is facing several headwinds, including unemployment, increased due loan repayment, and slower real wage growth. The loan repayment is likely for college or student loans. Unemployment is due to the tough jobs market that's going on right now. And these are really big issues that is ongoing right now. So, and then here we go. The unemployment rate for young people is up to 9.2%. That's a big gain right there. And that's not even, that rate is not even talking about underemployment. So students that could be working at your Wawa or a movie tavern or something like that just to have a job in the meantime while looking for a job in a more skilled profession, that doesn't even include that rate. So you have to really consider that as well. And so here we go. Boatwright said the pullback comes in all income cohorts seen earlier this year as well. Quote, with low to middle income guests further reducing frequency. So houses that make up $100,000 or less make up about 40% of its sales. So that basically means that the majority of people that go into Chipotle, the majority of households that go there are in the upper middle class at minimum to upper class, which is pretty surprising to really think about, that a fast food place that's the case, but here we are. It's really wild, the economy we're living in. So that's why Chipotle fell so much, 19% today. And I wanted to cover this because it's not because I own Chipotle and all this stuff, and I'm a huge fan of their business model, anything like that. I just think that it's really important to analyze data when you see it, and when you see something so tangible like basic fast food that is becoming tougher for Americans to afford. That's something that we need to pay attention to. It's really something we have to focus on and think about. Because this is not just saying, oh, like we can just go out burritos. Who cares about burrito? It's not about that. It's about the majority of people that are in the lower to middle income class don't go to Chipotle anymore. And we saw this with McDonald's, how a lot of people are skipping breakfast and not going to McDonald's, and they lost a lot in their revenue due to that. That happened earlier in the year. So this is not surprising at all. And here we go. In June, the chain introduced its first new dip in 5 years, the ranch, but that might not have been provided the boost in its value that the company hoped for. Yeah. So I just wanted to talk about that because I think that's something that maybe people kind of don't talk about when you look at the stock market and you say, oh, the stock market is hitting record highs, and that's great. I mean, if you are an investor, if you're holding money, it's obviously important to invest. I encourage everybody to invest. If you put in $1 a month to start, I think that's great. It's better than nothing. It's good practice just to pay attention to key metrics in the economy, whether it's just holding money in a state ETF or anything like that, or just investing in business that you have high confidence in. It's always important to do that, in my opinion, just for practice. But many Americans can't afford to put a ton of money away in their investments. In fact, many Americans are living paycheck to paycheck, and etc. So this is why I think this article is a great wake up call to the American people in many ways, people that may be out of touch. I think it's really important that we need to have these conversations with our friends, with our families, with everybody. So yeah, I just want to get that off my mind. And then let's see, there's something else here. We can move on to another topic. Let's see. Okay. It didn't cut them because of money. Amazon says it didn't cut 14,000 people because of money. It cut them because of culture. Yeah. All right. Sure. That's something. Yeah, sure. Culture. While candy is getting more expensive and less chocolatey. 4 Republicans back Senate resolution to undo Trump tariffs. Oh wow. I'm not gonna spend too much time on this one because I know we're getting close to the end of the live stream. I try to aim for about like 45 to an hour. So let's skim this here and see if anything comes out of it. So Senate passed a resolution on Thursday that would undo many of President Trump's tariffs around the globe. The latest noted displeasure at this trade tactic in Washington came just as the president celebrated his negotiations with China as a success, which was a basic deal, nothing in my view. But regardless, it's a good political accomplishment to put on your under your accomplishments. So that's why it makes sense for Trump to espouse this. Okay, so the U.S. would cut tariffs on China, and China would purchase 25 million metric tons of U.S. soybeans annually for the next 3 years. That's part of the details that I didn't see. But let's see what happened here. So in Washington, several of Trump's Republican Party, and remember, the Republicans have a very slim majority in the Senate, so only a few people going against Trump, and that's going to get passed because Democrats are usually unified voting bloc when it comes to the Senate. So several of Trump's Republican Party have demonstrated their dissent with Trump's tariff tactics by passing a series of resolutions this week that would nullify the national emergencies that Trump has declared to justify the import tax. Interesting. So on Brazil and Canada, the Senate approved resolutions to impose an end to tariffs on Brazil and Canada. Interesting. And Senator Rand Paul, he's more libertarian, so that's not a surprise at all. And Kentucky Republican, who backed Democrats on the resolutions, crediting Trump's for decreasing the tariffs on China, but said the result is still much higher than we've had. It will still lead to increased prices, which is true. So this is apparently the Senate can pass certain laws to nullify a presidential emergency, to basically say, okay, this is not really an emergency and all that. So yeah, we'll see what happens from that. Interesting. Yeah, I'm really curious to see what comes from that. So I think that's when the unemployment rate is supposed to come out, but I think due to the government shutdown, we don't have any of this data anymore. Man, I'm looking forward to getting the government back and running so we can actually get more data to analyze. But regardless, let's go into the last topic for today, which is gold demand hits record. So gold, for those you don't know, for the last maybe week or so, gold was selling off. It was having a correction, which is normal because it was rallying for much of 2025, with the dollar losing a lot of power and the treasury selling off and all of that from April up until now. The gold has really been on fire with many banks storing gold reserves all around the world. So that's no surprise there. So it hit a correction recently, but immediately shot back up right here. So gold demand reaches record in Q3 with quote FOMO bar and coin trade in full swing. So global gold demand surged at an all-time high in the third quarter, fueled by a wave of ETF investments and all-time high bullion prices. A new World Gold Council report released on Thursday, or basically today, showed total demand for gold has climbed 3% year over year. 3%, wow. That's incredible. Jeez. And it's above 4,000. We hit 4,000 this year. So it's really skyrocketed. So spot gold has risen about 50% so far in 2025, hitting over 4,300 per ounce before dropping due to the correction, bringing the monster rally to a halt. So yeah, nothing too major here, but yeah, gold is still very popular around the world. UBS analysts believe gold should rebound in the near term, reaching 4,700 by the end of the first quarter of 2026. Maybe before that, honestly. At this rate, you never know. Goldman Sachs sees gold hitting at 4,900 per troy ounce by the end of next year. Okay, so Goldman Sachs has a little bit less ambitious outlook for gold in that sense. So yeah, we have Palantir and Hood next earnings that are coming up. Hood is one of the fastest growing growth stocks of the year. Palantir has been one of the most up and coming rising AI type of technology stocks that have or companies that have risen this year as well, striking deals with the United States government, with Israel, I believe some other countries also. I think Saudi Arabia too. Let me just look that up real quick. I don't want to guess. I want to make sure I'm actually correct in saying this. Arabia. I know I spelled Saudi Arabia wrong, or Saudi. Yeah, so Saudi Arabia is partnering with Palantir to enhance its capabilities in areas like AI and defense. So yes, so they did deal with Saudi Arabia as well. So yeah, so Palantir is really engaging its product all around the world. So that's one of the reasons why it's really risen so dramatically in the last several years. So yeah, so I think that's going to conclude the show. Please like, share, subscribe to the channel, comment anything you have for me. Again, apologize again. I don't have the second monitor set up. Still working on that, so I can't read your comments right now. I can probably pull it up right now, but But yeah, so I don't have any comments right now, but please subscribe to the channel, support me, and let me know what you guys want me to cover. If there's a certain channel you want me to cover more so, a certain website you want me to cover to analyze certain stocks, trends, headlines, maybe you want more video coverage of me reacting to something that Jerome Powell states, anything like that, let me know. Give me your thoughts below. And I was trying to go to my channel before I went to the studio by mistake. Okay, here we go. So yeah, you can just look up Mills Briefs and then subscribe to the channel. But yeah, thank you all so much for listening. Really appreciate it.